Thank you for tuning into the Northern Miner here at the Vancouver Resource Investment Conference. I'm pleased to introduce America's focused lithium explorer, Libra Energy Materials, and their CEO, Koby Kushner. Welcome.
Thank you.
All right. So tell me about Libra. You've got several assets in the portfolio. How do investors make sense of your priorities?
I think investors first have to make sense of grassroots lithium exploration.
Mm-hmm.
So grassroots lithium exploration compared to things like gold or copper, it's a lot cheaper and easier and quicker to gauge what you have earlier on in the exploration cycle. For hard rock lithium, you step on the deposit, you can quickly gauge if you have something very real or not by literally walking on it. The other thing you have to make sense of is you look at, we've all seen that chart of, exploration spend over time versus new copper discoveries, and you can see that copper discoveries are becoming more and more rare. Exploration spend, you're getting less a return on it because it's harder and harder to find a new discovery. With lithium, we've only been exploring for it for about 10 years, let's say. If you were to do that same analysis, you would see that we're actually getting rewarded in terms of making new discoveries.
Yes.
So our strategy is, look, there's an ocean of opportunity out there. There's a lot of low-hanging fruit. We cast a wide net, do a bit of work, and we can quickly upgrade or downgrade a project. So what's very unique about us is we're able to explore and manage 37 projects all at once.
Okay. All right, 37, that's quite the number. So how do you prioritize, or rather, what were some of your major milestones achieved on the better assets?
So I'll say that generally we rank our projects on two qualitative metrics. One of them would be a made-up word that we call explorability. So that is if there is a deposit hiding there, how likely are you to be able to find it and advance it? So several things go into that. What's the till cover? Is there any till cover? Is there outcrop exposure? Is there infrastructure access? Is it easy to actually get to and explore? The other thing we look at is geologic potential, which is the size of the prize, let's say. So as a general rule of thumb, we look for pegmatites, which host these hard rock lithium deposits, of at least 30 meters wide. We started off on Ontario. Most of our experience thus far as a company, a relatively new company, has been in Ontario. So just to give investors context here, most pegmatites being drilled off in Ontario end up being about 10 meters or even less in terms of true width. Okay. So we look for things that are at least triple that. We want something that has scale potential that'll stand the test of time. I'd say our greatest success to date in terms of new discoveries has been SBC. So that is near the Pickle Lake camp where we found several spodumene-bearing pegmatites, spodumene bearing the key lithium mineral, found a whole new pegmatite field. It landed us a Discovery of the Year award. It also helped attract cobalt metals into lithium exploration in Ontario. So we're one of two public companies that has a deal in place with cobalt. And what we did in 2025 was something very contrarian. We took our private lithium company public at the bottom of the lithium market back in July.
That's interesting, yeah.
So we were the only lithium company, to my knowledge, to have gone public in 2025.
How's that worked out for you?
Well, people go public for different reasons. In a hot market, people will go public so they can raise a whack of money, and then when the markets fall, they'll create a bunch of bag holders. For us, the strategy was we wanted to be able to use our paper as currency at the bottom of the market. And the time to buy up assets and get leverage to build torque into your stock, into your equity, is by acquiring things at the bottom and being counter-cyclical, and it'll pay off as things turn around. So, since we went public, we were aggressive on the M&A. We went from having 6 projects to 37 projects. We did this all using paper deals with less than 10% dilution to get there.
Okay.
And now that lithium has started to catch a bit again and people are getting more and more interested in it, Libra has started to take off. We've had a really good run over the last couple weeks and a massive spike in volume as well. And we're also now starting to be much more communicative with our investors. We just released results from the Cobalt funded program that took place over the summer at SBC and our Flanders projects in Ontario.
All right. Do you want to talk a little bit about what the more details about that program?
Yeah, sure. Thus far now we've assembled over 20 lithium-bearing pegmatites. All of them are undrilled, right? Like in a hot market, people would be excited to have one of these things as just one spodumene-bearing pegmatite to make as a company-making asset, like something to go and drill. What we did at the bottom of the market, when no one cared about it, is we banked up and discovered through low cost but high impact exploration and partner-funded exploration as well, a portfolio of these things. And you only need one of them to work for something to be a company-making discovery. Okay. So we're pretty excited about what we have. We're excited about what's coming as well in terms of some other M&A that we've been looking at, and then we're probably going to cool it a bit on the M&A side, especially now that prices have gotten up and up. Now, what's special now is investors are starting to reward positive exploration results, like what we saw last week in our trading.
Mm-hmm. Okay, so tell me a little bit about your share structure and who are your major backers?
Yeah, sure. So our largest shareholder is David Goodman. He's, he owns collectively with management, insiders. He's chairman of the company, and advisors. We actually own more than half of the company, over 50%. So because we stayed private during the downturn, we never had to do any overly dilutive, toxic financings to keep the lights on, right? So we kept our share structure intact. I'm the second largest shareholder of the company, and what's really unique is, I didn't pepper the street with cheap stock in this thing. Mm-hmm. And the founders, so 28 million shares of the 67 million shares outstanding are locked in for terminal value. We're part of something that we're calling the founders lockup. None of us can sell stock until there's a change of control. It's the most restrictive lockup agreement I have ever seen in my career. Nice. Yeah. And so investors can be assured that we are riding this out. This isn't a giant stock scheme. We're here to make real discoveries.
I wish we saw more of these kind of policies in place during the real downturn in the general market. Mm-hmm. Good on you for putting that
on
in place.
Structure, I do want to mention we've never issued warrants, so it's still a warrant-free story. Nice. 67 million shares out. Yeah. So as we saw last week, a little bit of news such a tight, small float, a little bit of news can really cause this thing to skyrocket, as we saw last week.
All right, so what are the two catalysts you'd like to leave viewers with for the next 12 months?
Awesome. M&A, number one. Mm-hmm. We've got something exciting that we are cooking. And then on number two, drilling. Yep. We have yet to drill a hole, and we are very excited to finally be drilling in 2026.
Do you have a plan in place?
Yes,
do you have
we
a budget?
do. We've
How
got
many
permits
meters
in
are you
place. The first hole that we plan on drilling will be at our Stimson project. And simply what we're trying to do there is trying to twin an old hole where historically in the 90s they were looking for zinc. They logged several intervals of pegmatite and noted spodumene in the core. They never acid it. There's no access to this core. So it's as simple as let's go twin this hole. Yeah. And if we like what we see, we're going to keep going, kind of thing. But what's exciting about that one is it happens to be next to Power Metals, which is, last time I checked, 150 million market cap, and here we are with a much, much smaller market cap. Yeah. So I think that if we hit it, could be pretty game changing for the company. And at the same time, if we miss, we have so many other exciting projects that still deserve a lot of love and work.
Yeah, excellent. Well, thank you very much for making time. That was Libra Energy Materials' CEO, Koby Kushner.